Hey everyone, the trader investor here. Today we have a very interesting day. Yesterday I explained how IWM is leading the way, whether we go up or down, is leading the way over the broader market. How I use it as my leading indicator to tell us which way we're heading, and I was expecting, based on a divergence that I saw in the hourly chart of SPY, just as a refresher, I'll draw it again here. Based on this divergence that I saw here, I was expecting the SPY to roll over. It kind of started to roll over, and then today, what made it interesting is it gapped up significantly to push for new higher highs. So we're in new high territory, right? All-time high territory. And yesterday I said, please do not be in a hurry to buy any put positions or go short, because we needed to see a break of structure. We needed to see a break of structure. Break of structure meaning we have these lows, or even these lows. Those lows are better. So we have these lows that needed to be broken, and we need to see either a retest of that zone or a lower high. So we have a high here, and we needed to have a lower high somewhere in this region to confirm that we have a break of structure. Until we have a break of structure, there is no entry. So I'm not in a position on a short side on this entry. Absolutely not. And I cannot stress that enough. Until we see a break of structure, there is no entry. And what we saw today was a reversal from that short-lived pullback. This divergence might have said, I am done giving you that pullback. I don't know. I don't know if there's more coming, because what I'm seeing is, on a very, very shorter time frame, I'm seeing as price is making higher highs, my oscillator is also starting to make higher highs. So on a very short term, this is showing confluence. They're both heading in the right direction. So I am not there yet in terms of trying to pull the trigger. However, we still have, from this to this, we still have a significant down highs, lower, very much lower highs in the oscillator. So as we move into Friday, as we move into Monday, if we start to see the oscillator start to go down, even as we go sideways here, or even if by tomorrow we increase, we see the oscillator going down, then it means that, for me, it means that the pullback has not fully taken place yet. So I still want to see a break of structure. Now this is the lows I want to break. I want price to do whatever it needs to do to break this, and then retest it and break it down. I'm exaggerating these moves just to prove the point. We want to see a break of structure. We want to see that break of structure holding, so we can go to the other side and go get some puts. What you don't want to get caught in is, if this becomes liquidity, where markets come and take it out as stops and reverses, and take out also the people who try to go short because of break of structure. We don't want to get caught in this. You don't want price to come down, people who think it's going to reverse be taken out, people who think it's going to go down be taken out. That's not where we want to be. Where we want to be is on the right side of this always. Price will break this, price will form a new lower high, price will break this, and we have an entry to the downside, and this would be our stop. And somewhere trying to close this gap is where I want to target. I want to target this. This is what I'm after. And I'm hoping this is giving me a better opportunity. Instead of, you know, the 412 area, maybe it's going to give us an opportunity around the 414 area. So much better entry for us if that happens. Again, remember, this is an analysis. This is tutorial to show you how to think about preparing for the next move down. The next move down means a break of structure. I like to use the 1 hour chart for break of structure, but if you prefer to use a smaller time frame, same rule applies. Nothing changes. We need to see lower highs made. We need to see break of structure. So in this case, this could be your break of structure. Your break of structure could be here. So if we break this and we form a lower high, we can go down some more. But for me, I don't use a 5-minute chart. So because I don't use a 5-minute chart, I'm not going to prepare or to give anyone any signal on this. What I want to do is focus on the hourly chart. But just to show you an example that this can be used on 30 minutes, it can be used on an hourly chart, it can even be used for that matter on a daily chart. On a daily chart, we've been making a very bullish move. We have an order block down here, and if we break this low, and price gives us an opportunity to enter, we can do this. And you know, here's what I want to target initially. But if we're doing it on a daily, because our stops are much wider, much wider stop, we need to ensure that we're at least targeting the order block. But if you go back to my order block videos, one thing I stress is when the market is bullish, long-term outlook market is bullish, do not enter the short side from order block to order block. It doesn't matter if this becomes a new order block. I'm not going to predict that price is going to hit this, because price has been really strong. It's been going up. So instead of trying to anticipate and get ahead of the market and it's a pullback, unless I see a break of structure, there's no pullback. Unless I see a test of an order block that's below us for a reversal, break of structure of that hourly chart, that's an entry. That's a beautiful entry. So don't be in a hurry, but to capture short term, because this is daily is very difficult to be patient at times, but to capture short term gains, if we break this structure, I want to close this gap. I want to close this gap first, and then I want to close this gap. So this gap will probably be the gap that will be closed, that will break the structure. As this structure is broken, we close that gap. Let's reverse it for a minute and go to IWM. And on IWM, here's my box of accumulation. Here's my box of accumulation. Here's the area where that accumulation has been broken, right here. Right here, this accumulation area has been broken, and price is using that as a test area. Like this test area is our support to go long. There's additional liquidity here that just formed, so it is possible that price will come and clear that liquidity to go back up. But my target on this is this liquidity area is target 1, and then the order block up higher is my target 2. So these are my 2 targets. I want to take a partial profit here and partial profit, or most likely the rest of my profits here, depending on how quickly we come here and get rejected at this order block. And very careful as we do that. But for now, this is holding, this test area is holding. That's exactly what we look at when we're looking at accumulation, distribution, terminal shakeout. So this is what we're looking at. this analysis will be wrong if this area becomes, if this becomes the area for the box and this line here is our test, right? Maybe we will have another terminal shakeout and that negates this, because I was only focusing at this block, right? I was only focusing at this block, and then in this block is where the accumulation happened. Down move, selling climax, accumulation, and entry. But if we look at a longer block, if we want to look at it this way and say this is our buying climax and our automatic rally is down here, then we still have room. We have to test these highs, we have to have some terminal shakeout and continue. So right now there's nothing that tells me my analysis is wrong. There's nothing that tells me that I have to be perfect either. So I'm not claiming that. What I'm saying is, here's how I'm analyzing it, here's what I'm expecting the IWM to do, and as IWM is leading the SPY, the overall market, this is what's happening. But divergence today, huge divergence. We have a gap up and price continues up in SPY, but in IWM we have a very nice gap, but we immediately close that gap. That first hour of trading, we've already closed that gap, and now we're in a consolidation for price to decide which way it wants to go. I'm still long here. I still have a position to hit my target one at least. 226.60 area is my target one. You know, about 10 cents lower than that. That's how I target it. I don't try to go to the exact penny. So that's my target one. And if these liquidity area is broken doesn't mean a wick. It means I want to see a close below it. If there's a close below it, then my entry was wrong. But until then, I have a long position, and whichever side hits, I will come back and do a video and let you know how my entry ended up for this position. So just a real quick now, we've seen how price is moving up. We don't have a break of structure yet. So with that, I would leave you to have a great day. Please don't forget to subscribe and hit that notification bell, and you'll get notified when I make new videos. That is an encouragement for me to keep doing more videos. Take care.